So I've got a great set of panelists here. I'd love to just have them come up. We've got, maybe start Professor Joe Amadi-Echendu. Joe, are you around? Come on forward. Let's give him a big hand. There he is. Joe is a chair of the International Society of Engineering Management. He's also a professor emeritus at the University of Pretoria. Welcome, Joe. We're glad you're here. I'd also like to invite Mr. Adrian Strydom to come up. Adrian, welcome. Let's give him a big hand. Adrian is the CEO of the South African Oil and Gas Alliance here today. Welcome. And last but not least, of course, we're happy that we can welcome Mr. Unathi Sonti. He's a chairman of the Maritime Business Chamber. Unathi, come on forward. We're glad you're here too. See here, other side. Okay, you could take a seat, and we will get started. So over the next kind of 45 minutes or so, we're going to explore a little bit of this topic. We'll talk about a few things. I want to touch on a few interconnected themes, right? So one is around managing and developing assets and capabilities. We all spoke as a group of panelists just before we got here around how do we think about capabilities in a world that's changing pretty fast. We'll talk about that. We want to talk about a little bit around the infrastructure side of things as well. There's a big theme that has come out around industrialization and how do we shift from an export mindset to a value-added mindset, and that's really an important one. And from where I'm coming from Nigeria, and we are in the same situation. We need to figure out how do we add value, how do we create and industrialize with what we've got. We're going to talk about that too. And then I think we'll round up with a little bit of a reflection on decarbonization and the energy transition, so that we keep ourselves holistic. So maybe to start, right? Let's start with the foundation, the basics, the beginning, and we'll talk about the asset base. Joe, I want to start with you on this one, because you've written and spoken, I think, quite extensively around capability and capacity development. Can you give us a picture of what you think it would take for African oil and gas and petrochemical players to actually build self-sufficiency, not just in terms of maintaining the assets, but designing and managing them end to end?
I just want to step back and cause a bit of confusion here, because I want everybody to wake up and help me answer the question. How did it take China about 50 years or thereabouts to move 800 million people out of poverty? They built infrastructure, didn't they? Some of the infrastructure that you have in China now are top in the world. But how did they do it without all these other rules that we've been hearing about? So that's what we've got to do. We've got to find out how did they do. We're talking 800 million. 800 million, that is 67% or thereabouts of the current estimates of the African population. Yes, China borrowed money from the IMF, and China is now one of the top contributors to the IMF. China borrowed money from World Bank, but now China is one of the biggest shareholders, the third biggest shareholder in the World Bank. But we're talking over a period of 50 years. So clearly they invested in the infrastructure, in the assets internal to the country. One of the challenges that we have in the continent is we tend to invest, or rather, we ask for money to take our natural assets and export them. And so we don't find a way of building that internal chain to make sure that the infrastructure can not just support the export, but also support the internal. So I think we've just got to start the job of getting our young people and every one of us to start looking inwards a little bit. I give a small adage very quickly. When I was young, I still remember that when you went to the farm, when you got the food, you made sure you ate before you sold. But it just sounds like in Africa, we're all very interested in selling first, but and then when we got the money, we free it. So I think we've got to start building, the skill set to make sure that those assets, for us to exploit those our resources, especially oil and gas, are built internally. For now, let me stop there for now.
No, that's helpful. And I want to stick with you, right? Because I think you've put a little challenge forward around, our capabilities and do we have the skill sets. And, I think you've occupied a privileged position, as you're a professor at University of Pretoria. So you've seen the type of capabilities that we're cultivating and the skill sets that we're bringing forward. In your mind, are our universities and professional institutions aligned to create the talent pipeline that we're going to need for the future ahead when it comes to energy? What are your thoughts?
I've had this question many times, and I've said it's not an issue of the universities, because as I travel around the world, I meet my colleagues who are also professors and I look at the students that they supervise. I remember myself as a student in the US, and of course my PhD in the UK. And I start looking at my research and what I was doing and who my supervisor was. My supervisor was not propped up or sponsored by the university. It was sponsored by industry. So I'm putting the question back to industry. Don't ask the universities those questions. How many of these projects are you sponsoring at the university? How many PhD candidates are you sponsoring based on the problems that you wish to solve for society to make money out of? And if you don't do that, but we had an occasion in Italy, and my colleagues there told me that, don't worry, we're going to have SNAM Progetti, we're going to have them all come this evening. I said, how do you do that? No, we're going to tell them that we want to do this work, and they must bring us the problems. And they will be there that evening, and they were. This was in Milan. And they all came. You try that here. Here we are right now on this. Konoko, where are the refineries? They're right here. Where are they in this hall? If you go to the universities, whether you talk about Stellenbosch or UCT or whatever, how many of the projects, how many PhDs are they sponsoring, working for them? That's really where the question is. It's not whether the universities are producing the right skills. If you don't bring the problems from there and sponsor those candidates who will come back to work for you, then there is nothing the universities can do other than what we see happening.
Okay, so you're pushing and turning the question a little bit on its head. So there's a role now for the industry to be a bit more linked up and synced up with educational institutions so that we do have those skills as and when required. And I think that's important. We were speaking as well before the panel. I mean, we've got a lot of assets across the continent that are, in some cases, aging, some cases that are obsolete, and we need folks that know how to maintain those, and they also know how to transition them as we move into a decarbonized world. So Adrian, maybe I'd like to pick up with you, because I want to just continue to explore this asset theme a little bit. And just from where you sit, because you have a view, I think, quite holistically of the industry, upstream, midstream, are South Africa's service supply players ready for asset retrofits and maintenance in a low-carbon world? What are your thoughts on that?
Yeah, maybe I should first try and respond to
by all means.
The statement, and I cannot agree with you that industry can do more, but I don't think we should, from an industry perspective, some initiatives are running. There is a collaboration between WITS community of practice currently, where the WITS professors and other professors in the country are getting together around the question of oil and gas and how to develop that further. So there is some thinking happening, and maybe in defense, it is not that easy to develop skill if there isn't a huge oil and gas industry in South Africa. So the challenge one does have is it the chicken or the egg first? And what we have done from an industry perspective, Sahoga perspective, over the past few years, we've been fortunate to develop, in collaboration with partners, about 2,000 plus artisans. And we managed to develop a pipeline from curriculum development, where we said, but these trainees need to have the correct curriculum. It has to be industry focused. So we were successful to some degree in that, and one measure of success is employment creation. With the onset of COVID, we contacted about 10%, sorry, 200 of the 2,000 trainees that qualified, and 96% of them were employed. So for us, that is definitely a measure of success. The other that is not such a good measure, I had a call a few months ago from one of our companies saying, Adrian, I have a problem. Our skill is leaving South Africa in their plane loads. So to me, it's bad news, but the good news is that the quality of the skill is in demand globally. So that tells a story. So there's not completely, nothing being done, but we can always do more in terms of working together, put heads together, put funds together to really aggressively develop skills, the right kind of skills for industry and for an oil and gas industry. In terms of overall picture, are we ready? I would say at this stage, more at a core and foundational level, probably yes, but there is upskilling needed. So if we develop the foundational skills well, upskilling will be very, very easy, because you then, and we've done some of the exercises, because you then build on a sound and solid foundation, and you develop the gap into the gaps that there are. Thanks.
Thank you very much. And maybe, Unathi, this is a good moment to sort of bring you in. And maybe if you, from where you sit in the maritime landscape, how would you sort of see those skill gaps, if they exist, and capacity gaps? And what are your thoughts on what needs to be done to close those?
No, thank you. I think first, maybe I want to go back to the assets discussion. We all understand and know that, in terms of the port facilities that we have, whether it's ports, it's rail, or it's even, the terminals themselves, majority of them, where we are looking in terms of the future, with decarbonization, and the energy transition that we are talking about, you would realize that majority of the ports were built to handle heavy oils. They were not built, for these new energy commodities. And that's where, we start to look at, and, with the port of Ngqura having been one of, the newest ports in terms of a green port, and the port of Bochubai coming up, those are some of the things where we are looking at now when it comes to the skill set that trainings needs to begin now, where we are able to look at the assets.
What's a green port, maybe for the audience? When you say green port, what does that mean?
A green port, it's where majority of, environmental management regulations are highly regulated. For instance, where certain things you can be able to do, like, when it comes to hull cleaning, you can do hull cleaning at all these other ports, but when you go to the port of Ngqura, you cannot do in-port hull cleaning because of that debris and everything else that is from the vessel. So it's in that form. For instance, you can't, as much as all our ports, they move bulk, at the port of Ngqura, you cannot be able to move iron ore, uncovered there because of the status of the port. So it's in that form. So I think there is a skill gap because in terms of ports themselves, we don't have that many seafarers that have worked in managing or working on ships that they've got commodities such as ammonia, LNG, and all of those things. So there is that skills gap that we would need to start now, preparing, so that when we make that change, we've got LNG terminals that are coming up in the country, and for most of them, we would see the skill that is going to be coming is going to be imported skills. And if we don't have a program now, whilst we are still planning to build, and some are already at construction phase, where we train, our local people, that's when I think we would be able to cover that issue with regards to skills. But in terms of the assets themselves, there is still going to be a need for more investment in terms of how do we change, the jetties that were built, the terminals, that they will be redundant and not be fit for purpose with what, it's coming up. So there's quite a lot that needs to be done.
Okay, so the installed base is still fundamentally linked to traditional hydrocarbon, petrochemical, and we need to see a little more investment for future-proofing as we go, but not just investment, also the capabilities and skill sets. Okay.
Yes.
Thank you very much.
Thank you.
So I think it gives us a little bit of picture of the assets, which I think is helpful. Of course, assets, you could think of them as the hardware for our energy sector. But then, of course, investment becomes, in some sense, the software, right? And where is the investment going? And how does that translate into industrialization? I think that was also the challenge we tried to set out at the beginning of this discussion. Adrian, you said something just now, right? You talked about that the oil and gas industry is a small one in South Africa, but maybe could you shed a little more light, especially for our audience, around the current investment climate as you see it for upstream and midstream gas, specifically gas projects? Where is that going, and where are the blockers?
So certainly, if we look at exploration, we are not doing well as a country. Worldwide, if you look at Guyana as an example, Guyana is attracting a lot of investment currently. Yes. So if you look at a more local, regional example, Namibia, huge interest and investments into Namibia. South Africa, not such a good story. And I think, to get to answer your question, if it's not easy, relatively easy, to do business in a country, investment will flow elsewhere. I mean, that is a given. And I think the question that one then needs to ask is, what are the blockages, which is the one you have asked. The one is, for billions of rand to be invested, there needs to be legislative certainty. I see. No company will invest their billions if there isn't legislative certainty. So that is one of the issues related to oil and gas exploration. Our legislation isn't in a good shape. The frameworks, regulations, they're busy. Government is currently busy refining that and developing that. So that's one of the key issues. Another very important blockage is that of, legal cases. as soon as there is an attempt to start exploration somewhere, the green lobby goes to court. So that, unfortunately, blocks exploration, first up. And by their own admission, they know that they're not going to be able to stop it, but they will block it as soon as it comes up. As soon as the opportunity comes up, they will go to court. And one of the challenges with our legislation is that it's so highly developed that, you know, if I want to take you to court for wanting to explore and without any reason, I can do that. I don't have to give any justification for going to court. So it's just so easy to go to court, and then it blocks the exploration for another couple of years.
Yeah, because I think one of the things that that we hear is that there's a very serious requirement, for example, for gas in Nigeria. We want it in Nigeria as well. Don't get me wrong, but here in South Africa, right? You know, I speak about Nigeria. When you speak from the heart, you just talk, huh? So that's why. But in South Africa, there is a gas cliff, you know, and it's not just gas for today's power, right? We need it for today's power, but it's also for tomorrow, right? Because gas is going to be needed. You know, you got to firm up the grid. Even if it's going to have large-scale renewable deployment, you still need some gas, some management of the intermittency. What's it going to take? And maybe I'll open this up. You know, Unathi, you know, I think you've set out some challenges here, right? You said legislation, and then, you know, there's environmental. You know, what do you think it takes to sort of move past that? Is it, you know, a national strategy? There's a strategy that South Africa has. Is it strong enough? Is it visible enough? What do you think is going to be needed?
So the IRP certainly is a step in the right direction. It's sort of a plan in terms of an energy mix of the future, and it is definitely highlighting gas as one of the important sources and technologies for energy. But to get there, obviously, you know, you're going to have LNG imports initially, and then, of course, the ideal is to also then have local gas. We've been blessed with an abundance of our own resources, so we need to explore, and we then need to address those legal issues head on with intentionality, making sure that it is easy to do business in South Africa. That is the only way that we are going to succeed and attract investment, is to make it easy for oil and gas companies to invest in the country.
Do you want to add to that? I think you had a point.
Yes. No, and I think that making it easy, you know, for business to do, you know, for industry, you know, to do business in South Africa. I think in simple terms what we need a government that is intentional about what it's trying to do. We need a government that is present, you know, in the current form of one, where one needs to, when one is interested, you know, with an exploration right, you have to do all the work where you go to the communities. You convince their communities that I want to do this project in your community to help your government, and the government is absent in that. And I think that's what we need. We need a government that is present, a government that is firm, and a government that is united. You know, these fragmented departments, where one department says this is the direction, and then another one comes with a regulation that blocks this direction. So these are the issues that, you know, needs to be fixed. We need to know from presidency in the country, you know, from DPME, from DFFE, from DMRE, all of those coming together, from the energy ministry as well, all of them coming together and saying this is the direction that the country is taking. And I think the courts would now take a form from that, because I think, you know, courts have now been used as now this third force that is coming up against all these progressive, activities. And I think once the government is firm together with the justice system, then we would be able to move forward. And that is something that is not, we do not need a planning for it. We do not need a bill for it. We do not need a regulation for it. We need just government next week, once they are done with G20, focusing on G20, to come back and say, this is the direction and this is the agreement. Then we move forward. Industry would follow and industry would support.
Powerful. Joe, I think you want to jump in. I'm seeing you ready to go.
No, I think I want to pivot back to the fact that for a long time, and even now, the how do I want to put it? The mindset has been to export. And so everything else, legislation, this, that, everything has been to support export. I think we need to turn around and say, no, yes, we will do export, but first, we will need to feed ourselves. We'll need to bring this thing home. We need to have an internal market. You go, there is Namibia with the new fines. It's going out. But what about us? What about, so the focus, again, this is why you're getting the investment. What's the challenge for South Africa? Because if you're going to do it in South Africa, you're going to be forced to put a bit of that value chain inwards. And that's what the regulation in South Africa is doing. If you look at, we want to build a big refinery in Uganda. Well, where are you going to get the oil to feed that refinery, right? And why should Uganda, be building that refinery instead of supporting the refinery that is built
the
where
destination
the oil,
market.
exactly, so that then they can get a, so it's been export out of Africa. So all the governments, whether you talk about South Africa, Nigeria, Uganda, Tanzania, everybody's thinking export. So when we think of commodity, we think export. I'm just saying, why don't we think of commodity and look at the internal market and see how we move those commodities internally within, at least from the continent side. At least we got AFCFTA now to begin to make it work. Because I just feel that for AFCFTA to really, really take off, we've got to have commodity training amongst Africans, because that's, from the mechanisms for doing that are much easier already. The Africans know how to export to the other African country.
Okay, Unathi, I know you want to, but I want to, before we go too far, we'll get to you. You've said something about CFTA, the Continental Free Trade Agreement. Help us, for the audience, for myself, quite frankly, help us understand how is that going to, what's that going to do in terms of, this flow of commodities, and tell us how that will unlock, in your view, this type of regional movement that you just talked about.
I see, in the recent times when we hear of the tariffs that the U.S. has been leveling, China was one that was unmoved. India was barely unmoved. Why? Because they have a large population and internal consumption. Where do you get that in Africa? You're not going to get Namibia or Rwanda to give you that. You're going to get the continent. So you better, and then if you can, because you are already geared up to export to the next Africa. Use the AFCFTA as a tool to start exporting to the other African countries. And I know everybody's chasing after the dollar and whatever, and who can give you the highest dollar. But then it hasn't helped us very far. So that's where I think it should start.
Okay. Unathi, this is good. Do you want to jump in on that? Because I saw you.
Yeah, so on the AFCFTA, I think that is very key, and a critical point. But also it goes back to the infrastructure, discussion, where there is no built infrastructure for us to trade amongst ourselves. It is very expensive for Africans to trade amongst themselves currently. There is no ease of movement to certain points. So we need to also, merge those two. Whilst we do the trading, we try to, to do the trading. We also look at building infrastructure that will connect us. We go to issues of, immigration, make the, ease of movement amongst the continent for people, where, also we look at, flight connections and all those things. For me, went to Morocco, and I told myself I'm not going back there again, because if for me I have to fly to Europe first, then come back to Morocco, that traveling alone, it kills you. So those are some of the bottlenecks, and some of the things that we would need to work on, but the opportunity is there. And I think the trading opportunity is there. It's just that we need to get all these governments, to start working together. From the maritime front, we are currently now, busy trying to establish maritime trade routes in the continent, where at least we can now start utilizing, things such as cabotage, because we would have the commodities, we would have, the cargo that is needed. And that is, some of the programs that would assist us in trading together and building that one Africa and, that one ocean, which we have.
No, I think that makes a lot of sense. And Adrian, maybe it'd be good to bring you in here too, because Joe, I think where you're getting at, you keep talking about, the resources are there, right? And demand is there as well. So it's linking supply and demand, and that's the infrastructure question. But how do we get more specific on that, right? Like, where are we truly bottlenecked from infrastructure, Adrian? From you, because you speak to these, these folks upstream, midstream. Is it storage? Is it coastal storage? Is it, vessels? Is it, well, what is truly holding us back from realizing?
So there are a couple of areas where we can do better. The one is our port fees are among the highest in the world. That's not useful. Particularly if, in the oil and gas industry, we also do a lot of maintenance of rigs. So our member companies typically would be involved in that. And it is not that easy to schedule maintenance jobs, and some of those maintenance jobs could bring up to R1 billion at a time. So we're on a coastal route, and certainly if we could make it more attractive, it would create more jobs. We could do a lot more, I believe. And in terms of the infrastructure, I believe that we could, if you look at, again, sorry, to give, look at the neighboring countries again, Namibia, they're doing very well. I've been there a couple of weeks ago again, and they've done a few floating docks, and they're doing extremely well with those floating docks. Projects coming in that, and I'm not saying we're competing with Namibia in that, but we can do a lot more and a lot better by developing our infrastructure in such a way that it is more attractive for rigs to come to, and ships as well, to come for maintenance, repairs. These vessels are like cars.
Yeah.
Every certain time frame, they have to dock for maintenance. So it's really about saying that we are open for business, and to demonstrate that.
Yeah, that's what I'm hearing. I'm hearing, don't avoid the own goals, so to speak, right? If your port fees are too high, if your turnaround times are too long, it just becomes self-defeating eventually. But I want to go back, and I again, going back to the infrastructure point, but then maybe I want to take it one step further, Joe, because I think, you set a provocative tone at the beginning of the conversation. You talked about what China has been able to achieve, and why can't we achieve something similar? And I think, correct me if I'm wrong, but I sense where you're going with that is around industrialization, and how do you start to take this mindset of how do we move away from just an export focus, no value add, to how do we then start taking and valorizing our products, whether they're, oil, gas, whatever the case may be, regionally and at home. What do you think in terms of the steps that, governments should be taking, nations should be looking at in order to get that shift to happen, right? How do we go on that journey? You talked about China. I want you to help us sort of now bridge the gap.
I mean, there are so many examples, but let me take this one. Zimbabwe says they want oil, right? Namibia has found oil. Shouldn't Zimbabwe and Namibia start looking at co-financing Namibia oil so that it will get to Zimbabwe? Strive Maziwe, for example. Maziwe is busy building AI factories, but he's not building them in Zimbabwe. Cassava Technologies is building them there and there in Africa, but Dangote is prepared to build a 2,000-kilometer, pipeline from Namibia to Patrice. Let's just mention in some of these names. Come on, guys. Let's make sure these commodities move within the continent. If you can take the commodity, go to Guinea-Bissau. Look at now in Guinea with the iron ore mine, right? They're able to put the infrastructure to move it out of Africa. Yeah, we've got. Here's the more painful one here in South Africa, which most of you know. Our richest iron ore mines are somewhere, near Kathu, Sishen, Velgovenden. What we did was we put a 600-kilometer fast rail line to move it, and when you take that ore, you go through Saldanha Steel. Before you get to the port, Saldanha Steel is dying. How does that make sense? Do we have to look for, I know everyone talks about financing and but we're financing buying Rolls Royces, we're financing buying, we built the World Cup stadiums, didn't we? So somehow.
Now, how much of that is like, just to push, right? Okay, this Saldanha Steel example, right? Is that competitive with Chinese imports today, right? Is it an issue of we're just not thinking about it? You've got the ore passing through, or is it just that the global scale of our competitors has passed us by? Well, what is your thought?
Listen, you just said port fees are too expensive. All right, fine. So if it is Namibia is going to using our ports, we give them a discount because that's how we invest in Namibia. But we say no. We've got all these rules that come from wherever. I said you got to play. Look at the Dangote challenge in Nigeria, right? You got the crude in Nigeria, but he's got to buy it at whatever international market because
Buys
he
it
does
from the States.
Exactly. He's got to buy it in that. And so how does that? You got to give something, and this is where sovereignty or sovereignty comes in, where we go say, okay, our sovereign wealth. We're going to use our sovereign wealth funds to subsidize these kinds of things to make sure we get the money, because it's always about going out to the international market and they say, no, we don't want to invest in that. Yeah. And if you're not doing export, we're not investing. Yeah. Well, we've got to use our sovereign wealth funds. That's what UAE has done. That's what the rest of them have done. Let's start doing it and not stop talking about it. So these commodities must move internally within the African continent. Okay. That's really my point.
Take the point.
Yeah, but I think where also that is needed. I'm not sure how many in the room are commodity traders, are buyers and are cargo owners, because that's where it starts. So if then us in the room, we are not creating, that demand within the continent, and obviously it's a matter of, I get this thing at a dollar rate, I get it on the South African, rand rate, so which one would I take? I would take the dollar rate. So that's where it starts. It starts with those that look for the market. They need to start looking for the market in the continent, because if then the ones that come and say there is a demand, they are not looking for any buyers within the African continent, you won't get it. Similar to fishing. So fish, for me, it's a commodity. We may be talking about all of these other ones, but it's a commodity. Our fish, before even the catchment season starts, there is a consultant who's already gotten an order, of that entire, season to say, this one, Once they fish, that one is going to Spain, and nothing remains here. And we don't even eat our own fish because our fish is exported. It goes back to that. So there needs to be, awareness programs that we do, in terms of what is available, what can we use, and how do we do ABCD. So if any of those things are not being done, so we won't be like China. We would never be able to be that comfortable, because for them, they were intentional. They said, this is what we are trying to do. We are going to build our economy this way. Here, we are trying to look always for best international practices, which sometimes they are not a best fit, for us, if we look at them.
All right. As we move to close, right, because we're going to finish on time, I committed to do that. I want to leave us with a couple of just provocative questions, right? And we'll maybe go through the panelists. You take one or the other as you see fit, right? We've been talking about shifting away this international export mindset and looking internally, right? And two things come to mind. One, on the production side, oil and gas production, right? We've seen countries like Angola that have decided to pull out of OPEC. Back home, for me, Nigeria, right, we're starting to test our OPEC limits pretty consistently. We've got good production now. Should we start thinking differently about our role in bodies that are global like OPEC, or should we think about what's best for our countries, our region? That's one question. And the second question I want to ask, and you take either of them, we'll go just the final word down the panel, is, Joe, you raised the point around money, and the money needs to come from somewhere. And I said at the beginning of the conversation, all these conversations happening in COP30 and COP29, all the COPs, we don't see a lot of that money coming here, energy transition money. So how do we make sure that as we try to invest in our own energy security, whether it's upstream production or further down the value chain, that our transition is a just one for us, for people here in our countries and in our continent? So I want to leave the panel with those two questions, and maybe we'll start, Adrian, take the one that you like the best, and we'll go down the line.
Thank you. If you look at 600 million people without electricity in Africa, there is certainly a market for energy in Africa right there. And the last time I checked, we are a growing population. Only China and India are growing. The other populations are stagnant. Africa will outgrow any other nation in terms of population size. So there's a growing market. We imported 33 billion rands of diesel in 2023. How do we do that more smartly? So I know I see the chair standing up there, so I can go on about this, but I believe there is a really business sense in intra-Africa trade, stimulating that, making sure that we benefit from intra-Africa trade so that we develop our people, develop skill, develop competence, develop infrastructure, and make sure that we build the continent. Thanks.
Thank you. We'll do 30 seconds each, and then we'll round up.
Okay, I'll take a very short time. OPEC Plus. And now you've got Guyana and a few other people coming in. Are they really, well, let's just do the MAGA. Yeah? Let's make Africa great. Let's focus on Africa, because if Americans want to focus on America, let's focus on Africa. What does OPEC do for us? Right? It's trying to regulate Russia. What does Russia just do in the last how many days after their refineries were bombed? They dropped the price of their crude by $23 whole. So you could actually buy Russian crude because their refineries were knocked out by, where was OPEC? So you know, that's the multilateral world that we live in right now. So we've got to be bold and stop apologizing for it. The other one that you ask about money, I don't know that there is no money in Africa. It's just that the money is being channeled based on maybe historical, maybe whatever that has existed from colonialism and so on. Come on, let's get rid of that in our minds and say, no, let's put, if it is not in dollars, it's in rands. Yes, rands can also buy you food, but why is it that it's got to be fixated in dollars? You know, I am not suggesting that we leave dollar or whatever. I'm just saying, why don't I take my rand to Malawi, and the Malawians will take my rand and give me kwacha with not having to convert it through the dollar. That's what AFCFTA is trying to do. We're building those systems, and let's start supporting those. That's where I want to leave it for now.
Thank you. Last word.
I think the money is available in the continent to develop, you know, our infrastructure. I think it's just a matter of us realigning and also for industry to push, you know, organs such as United Nations, the relevant commissions, because that's where policy and direction comes from. So if we then push in those levels, I think there could be something that could be realized. But I think Africa, as Dr. Joe said, Africa was never poor. Africa is not poor. Africa is just a sleeping giant that if it's not this current generation, probably the next generation would have to wake up that sleeping giant and things would begin to change. And we would truly have one Africa that is progressive, and Africa that is contributing and feeding its own people without relying on imports, on the same things that they have exported.
Thank you, Unathi. It's not next generation, it's this one, huh? We don't have time anymore, so it's this one. Guys, we're out of time. I want to thank our panelists. I love this MAGA, Make Africa Great. I like that one.